Steve and Dave use eToro to trade.
$5,000 in trading power to $103,000 in 1 month, $50,000 to over $98,000 in another month, then catching the bottom of the most recent crash, nailing 5 out of 5 swing trades for 20%, 37, 64, 65, and even 96%, all in
cardio burns fat, right? No. Cardio actually burns calories.
Okay. Good morning. Happy Monday. It is 8:11 a.m. on the 14th of December. Welcome to the Forex.Today YouTube community. My name is Wayne McDonald. I'm super happy to be a currency trader. And I'm super happy to be trading currencies with you this morning. However, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Dude, I look rough. I in my meditation this morning, I'm like, and so I'm a little slow, and apparently I think I forgot to comb my hair. But I've been up for hours. It's just funny, like, wow. Anyways, hello. Welcome to reality, right? Welcome to reality. So anyways, good to see you. We're here to talk about technical analysis, fundamental analysis. I think what we're going to cover today is go through the calendar, look for risk events and opportunity events. We're also going to do some technical analysis on gold and oil and Bitcoin and dollar pairs and yen pairs. So if you want euro dollar and euro yen and Aussie dollar and Aussie yen, yeah, we can do stuff like that. And then please ask questions. I'll cover anything I can. And apparently YouTube is showcasing the Forex.Today coffee mug. So that's weird. That's never happened before. So I have one. They're all right. They're pretty nice. I actually bought one. Yeah, cool. So anyways, thank you for being involved. Thank you for being here. Remember, click the like button. About half of you that watch the video live click the like button. And then over the course of a day, another 1,000 people watch. Nobody clicks the thumbs up button. It's pretty amazing. So, am I doing something wrong? So anyways, click the like button. That would help me know if I'm doing things right. Also, it tells YouTube that this is quality content, and that's really what I'm trying to get to. Tell YouTube this is quality content so that maybe they can share it with some other traders. Remember, the more people that sort of follow our planning methodology, the more it'll work out. Remember, this is a self-fulfilling prophecy, and I honestly don't believe it's a zero-sum game being a currency trader. Bulls have their opportunities, bears have their opportunities, and it's more of a symbiotic dance. So the more people that know that, the better off we'll all be. And plus, you'll stop trading in the middle and getting your feet stepped on all the time. I'd like to thank Traders Way for being the sponsor of our community. TradersWay.com is a broker. If you're a currency trader, you're going to need a broker. What they do is when you click the button, they execute your trade, which means they have to provide a service, and they have to have servers, they have to have staff, and also they have to pay for the license for the software that you're using, whether it's MT4 or C-Trader or whatever it is. That has to be paid for. And then, of course, you need liquidity providers on the other end. So you got to pay for that reach, all that kind of stuff. And so you need an execution partner like Traders Way to be part of your successful Forex trading business. So please give Traders Way an opportunity to earn your loyalty and respect. Just out of the idea that they are hoping that these webinars will make you a more successful, more consistent, more confident currency trader, and ideally profitable, because a profitable currency trader is going to trade for weeks, months, years, and decades, not just pop some money into a trading account, blow it up, and move on to the next thing. So right off the bat, their attitude is significantly better, or at least more aligned with your best outcome than any other broker out there. So give them an opportunity to earn your loyalty and respect. TradersWay.com, TradersWay.com, TradersWay.com. Thank you, Traders Way. Good to see you. Oh. I was at the gym with my son and we're lifting weights. I'm like, oh, I hurt my left wrist for some reason. And then yesterday I spent the whole day carrying a giant chainsaw along my left hand, and now I can't even move my left hand. My wrist is just shot. It's even cracking when I move it. Oh. All right. But luckily, this is the only thing I need to succeed, and I'm right-handed, so, I don't need that left hand. It just gets in the way. All right. So, anyways, let's start with the calendar. Okay. Arrow, CAD, Yen, Wayne, 1 hour bullish zone. Okay, well, yeah, we got to check out the higher time frames first, right? Okay. Lewis says 5%. No, well, use Bitcoin because Bitcoin's less than 2%. Bitcoin. Okay. Okay. RBA meeting minutes. What do you think about that? Coming up tonight. Okay. That's going to be a doozy. Make sure you read that. You're trying to look at information about the trade war with China, about their import-export opportunities, and just the general health of their economy. You want to see if they're done cutting interest rates and if they give some forward guidance on what kind of information they'll need to see before they start normalizing. Right, which I think we're a long ways away from that. And then of course I don't really know about their COVID response. Are they rolling out a vaccine or not? So maybe that'll get discussed. So I'd pay attention to this one, especially if you trade the Aussie dollar. That's probably the most important thing going on, except for the actual new press conference, right? So those are the meeting minutes, but you need to know what's going on the Oz. Okay, going on to Tuesday, unemployment rate in the UK, sure, fine, great. Overshadowed by Brexit, obviously. We're going to see how far down the line they can kick the can. Can they move the line in the sand? Right? I think they can move the line in the sand. Right. So, anyways, we'll see. This is just overshadowed. Okay. FDI for China, probably not that important relative to everything else. Trade balance, import-export data out of Japan. Yeah, remember, we need Japan exporting more than they import. And so the more they export, the better things are. And the interesting thing about sort of Japan is the more they export, the more the yen weakens. But you're like, well, that doesn't make sense, because if they're exporting cars, for example, they're importing money. But then if in the interview I did at the Bloomberg headquarters, I don't know, 10 years ago now, one of the things they asked me is explain the Japanese housewife. And I don't know if you could ask such a question anymore, but I'm like, oh, if I know anything, I know Japanese housewives. But it has to do with the Japanese women in Japan often manage the money for the household, which is very interesting, right? And just because interest rates have been near zero forever, most of that money gets invested outside of Japan. So the more money Japan makes, the more they invest outside of Japan. I mean, like, think about it. Do you want to buy the Japanese stock market when 70% of the Japanese stock market's owned by the central bank? Oh man, this coffee's heavy. Check this out. Oh. Santa. Jim says rates are frozen until the end of the 2023. So one of the things we talked about on Thursday at the swing trading group was the closing the productivity gap. And that's really what all these central banks are going to be looking at. Once we move into what's known as a trough, right, showing that the bottom of the economic downturn has been achieved and it's uphill from here, then they want to say, well, how long will it take to get back to normal, or what I discussed as potential GDP? So this process of normalization is, filling the productivity gap, and these economies are going to achieve them at different rates, meaning at different times, and how we fill that productivity gap will indicate at what point the central bank will start normalizing interest rates. And as I discussed on Thursday, there's a planned overshoot. So you can read into that and figure out, for example, the Fed has told us enough information where we can figure out where we are in the productivity gap, how far we are from potential GDP, and then how far we need to be above potential GDP before they normalize. Pretty cool, right? So you can do that for all central banks, of course, because they're all kind of doing the same thing. Okay, they'll just achieve those at different times. Master Trader says, how come different calendars rate different events at different... I don't know why they rate it that way. Okay, this is why I'm going through it, and I'm telling you what I think. Okay, so like CPI, okay, great. Normally that's this is a highly watched indicator, except this time it's overshadowed by Brexit. So I don't know. Probably not that meaningful. German, services and such. What we want to see is German exports. Okay. Okay. Now, CPI out of Canada might be a little more interesting. CPI out of Great Britain, only because, well, we don't have Brexit going on, right? So we're trying to look at the health of the Canadian economy, right? And see where they are between actual and potential GDP. We want to see if their economy is productive, and then, of course, at some point, when unemployment falls, employment rises, consumer confidence increases, will retail sales increase, and therefore create a CPI that's going up? Well, there's a lot going on before all of that happens, so I wouldn't expect much here unless oil prices go up, because oil prices heavily alter CPI. But I think we care more about subcomponents of GDP than just headline CPI. Okay. Retail sales of the U.S., fine. Swiss National Bank quarterly bulletin, fine. Okay. FOMC economic projections, FOMC monetary statement, FOMC interest rate. What do you think about that? Yeah, that's the biggie. Once that's over, it's the year's over. This is, to me, the exclamation point on the end of the year. Now, often you have a couple more days to wrap up things, but that's it. That's it. Okay? That's it for, right? Then we got Aussie jobs, which is huge. Then the day after that, and Swiss National Bank interest rate decision, great. Monetary policy assessment, very good. Something else to read. Bank of England interest rates, great, awesome. Bank of Japan monetary statement, see how much is going on. Bank of Japan press conference related to their policy. Russian interest rate decision, they're squeezing that in. People's Bank of China interest rate decision. So this is it. This is like the fireworks at the end. Can you see that? The grand finale. Wednesday, Thursday, Friday, Monday, Wednesday, Saturday. That's some movie, right? I speak English. Monday, Tuesday, Friday, Sunday, Saturday. So yeah, fireworks at the end. Just Swiss. So just all massive amounts of central banking data. Cool. Monetary policy is the most important policy, but you have to understand. I mean, you're right, Pure. And I know you understand Pure, but I'm talking to everybody here. The reason we track all this other stuff is so we can discern what we think monetary policy is going to be. That's it. Peter says, if Chinese news is positive, will that affect the Aussie dollar in a positive way? Yeah, I would imagine so. Yeah. But remember, like, I think Australia is banning exports of Australian wine to China. So, will that impact anything? No, but if they restricted iron ore and coal. So, it really comes down to how much they're going to trade with them. And right now, there's trade tensions between China and Australia. Cool. I'll send this forth. We haven't looked at this for a while. Long euro contracts are going up. Short euro contracts are going up even more. Okay. Which makes me think this is going to start crossing down. Euro dollar should start coming down. Okay. See that? Increase, a small increase in longs, a bigger increase in shorts. So I'd expect downward move in euro dollar soon. Oops, I guess I should actually analyze that. Hang on. So what are we looking at? Dollar weakness, hooray! Mediocrity on the end, boo! At least Swissy not going up, which is somewhat of a victory. Yay! So right now we're just basically selling buck. So Aussie dollar should be up. Pound dollar should be up. Kiwi dollar should be up. And Euro USD probably flat. Cool. All right. So this is good. So we'll start with the dollar pairs and then we'll go into commodities. So let's do it that way. Piggity, piggity, can't you see? Right. Wait, that's not pig. What? I clicked this, didn't I? Wow, that's trippy. That's trippy. All right. Anyways, so I got knocked out up in here somewhere. And so I'm done this pair for the year. Only because, you know, I didn't like this. And I wanted out anyways. So somewhere in here, I'm out. And we don't know if this is going to hit this target, but let's take a look. If you're a bull, okay, this is your entry. This is the MCPP. This is the WM2. So that's a perfect entry here. It opened out a position, came back, and gave you an opportunity to buy it at the weekly CPP. So in that case, if you bought it there, it depends if you're counting this as the bottom or that. I'd count this one. So it says 135.24 and you're done for the rest of the year. This is this week's target. Okay? That's what you're thinking. So your out would be here. Okay? But here's what you're doing. You're reading into this. So you're counting that as a breakout. Well, let's see where we are. I suppose. I just don't like it. That's all. But notice how we started the month OOP, and that it did come down. It took 2 weeks, but it did come down and give the proper long for a bull. So some bulls might be thinking here. So you might then, right, with this in mind now, you could reanalyze this and say, okay, this is the start of the week off the central pivot. Therefore, your target is 136.24. And then the other part of that is the month you're playing this target for the month. Okay. Now, typically that would be monthly R2, but let's just overlap these. Okay. So nonetheless, what can you do now as a bull? Nothing. Master trader, I'm typically out this week. Okay? Doesn't mean that's the top, but I'm typically out this week. Okay? Okay. So that's that. You see that? Now, the way I teach is you needed to be here on that first candle or you're just not doing it right. So if you're like, well, Wayne, that sucks. We're up here. Now I can't do anything. That's right, because you didn't do your job. Okay. Yep. That's right. You either did the Friday front run or you did the market open. And if you didn't do either of those, you don't know how to swing, or you don't have the conviction to swing properly. Okay. All right. So let's cruise in here. Here's the top again. Okay. So you can see here's the market open. So under those circumstances, we are predicting WR2, which is 122.22. Okay. So you should be long right in here, just above 121. And there's nothing really for you to do now as a bull. As a bear, you're preparing to sell. Okay? You don't really like it because it's not the right price on a weekly, but it's the right price on a monthly. So it's a bit mediocre. Okay? You're putting a lot of, you're essentially betting that this is going to hold, and I can see why. I wouldn't consider it a good bet, though, because there's other things that say up. Okay? For example, we already have the 1, 2, 3 here. Okay? And I think we talked about this one on Thursday in the swing group. But anyways. Yeah, there you go. Okay. So now I'm going to move my stops here. This one I'm going to lock in 400 pips on this one. And 400 pips on that one. I'd clap, but my wrist hurts. Oh, I can do it. Yay! Woo! 800 pips! Great. That's enough of that celebration. Cool. Going on to US Kitty Cat. Taking a look here. Okay. M3 top. M3 top. OOP. Okay. There's the OOP we talked about on the first day of December. And then we projected hitting down here fairly early. So I would say out if I were me, and I would prepare for a counter trend trade here. Meaning I wouldn't counter trend it myself, but I would prepare expecting a counter trend to the upside. Okay. Any questions? I'd expect it to counter trend back up to 130. Minimum. Did pound yen go up too fast? I don't know. It got me out on the way down. So I was knocked out with 333 pips on that, Dr. Age. So last week, I moved all my stops to lock in 333. And my pound dollar and my pound yen got knocked out. Boo. So they go up too fast? I don't know. I'm not watching them anymore. You took a Euro Aussie trade. Wow. And I think a strong buy place is... That's crazy. Yeah, you don't expect a strong Euro and a strong Aussie? I guess it's just my bias. So that throws me off. I wouldn't even look at that if I were me. Because I'm bullish both on the euro and on the Aussie. So that's crazy to even think about it. Why did the pair break the monthly target? What pair? Which one? US CAD? It hasn't broken it. Yeah, it hasn't broken it. It's not even... I mean, it just simply hit the target. There's one other target if you want to be aggressive, and it's like 26.50. And the weekly target, if you want to get that granular, if you want to get into the weeds here, this is a very obvious open here, okay, which targets S2. Again, guys, I have to reemphasize, you have to know how to swing trade because they're very, very obvious trades, right? So there's your role reversal. There's your open. It came back, whatever. You could have done the front run. You could have done the open. And it gives you a target and an entry. You know where your stop is. Like, it's all predefined stuff, right? These are like TV dinners. You don't need to know how to cook. You just need to know how to turn the oven on. So that's what that is, right? So, yeah, you can go for that, right? This predicts this right here. And then the bigger number, right, is predicting this. So they're both saying 26.50. What I'm suggesting to you is, we're at the conservative target. Like, does it matter? Well, manage it. Like, if you can get through this week, short, breakout, pullback, you got something to do because we got all those central banks. But, does it matter if you exit here or here this week? I mean, that's for you to decide, right? We're not trading futures, new traders, so it shouldn't matter. Okay? We're not affected by rollover, right? We're not long the future contract and short we're not longing the front end, or the back end now is going to be the front end, and we're not selling the short end, right? All that kind of stuff. So, right. So what would it be? It'd be shorting the front end, buying the back end, and trading the spread at the rollover. It's just not. That's not what we do. But here's the interesting thing. Many of you heard the story, so I won't do the long version. But I hung out on the trading floor of the Chicago Board of Trade with someone that had a seat on the board. And he traded the 10-year T-note. And so he sat in the 10-year T-note pit. And you can watch the S&P 500 trading right next to it. It's really cool. But it's really, 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 really quiet in the 10-year T-note pit. It's loud in the S&P 500 pit because they're still using open outcry. But in the 10-year T-note pit, they set it up like a Starbucks, and everyone has a tiny, tiny, tiny little desk with a computer, and that's where you did your trading. You might be trading $1 billion against the guy right next to you, but everyone's quiet as a church mouse. Right? But he was required to be there every day, but he only traded rollover. So 4 times a year there was rollover. And that's all he did was trade the spread between the expiring contract and the one that was going to become the new front end contract, okay? So he'd just trade the spread. So 4 times a year he'd actually trade. And the trading would last about 3 weeks. So approximately 12 weeks out of 52 he would work. Okay. Please, what is the relationship between T-notes and the stocks? Well, stocks and bonds are typically, historically, inversely related. So if you're buying the stock market, you're accepting risk for reward. Okay? So So you're putting your money in the stock market. If your money's going in the stock market, it's not in the bond market. Bond markets are pitched as being lower risk. Lower return, but lower risk. So the relationship goes like this. When you're eager to make money and you're willing to accept some risk, you invest in the stock market. When things go bad and you're like, you don't want risk, you just want a safe place to put your money, then you'd rather have bonds. So stocks and bonds typically are inversely related. So if stocks are going up, bonds are going down. If bonds are going up, stocks are going down, okay? Great. Now, you're saying yen and dollar. Well, when Japan, right? When Japan and the United States are doing well, they invest their money overseas. Which is another way of saying risk on. Okay? So if the stock market's going up and these countries are investing their money overseas, then what's happening is the money is leaving those countries. Okay? And therefore, the supply of those currencies globally goes up. So you can explain it this way. The value and the quantity, okay, demand, supply. So if supply shifts to the right to supply 2, the value goes down. See? This is Q1, Q2, which explains if quantity goes up, value goes down. So when things are good and the United States and Japan are investing overseas because they're willing to accept risk, then the value of the currency goes down because they're sending their money to the interbanking system, converting it to some other currency, and then buying some other thing with that other currency. So when the stock market goes up, these tend to go down. Now, when things are going bad, okay, when things are going bad, like think of it this way, shoot. Can I bring that back? Yeah, okay. Think of it this way, when things are going good, Americans are buying the stock market and they're investing overseas. Okay? Which then lowers the currency. Buying the stock market doesn't do anything to the currency because it's in the currency. But when things are bad, okay? When things are bad, like the economy is going down, unemployment's going up, Americans tend to bring their money home to buy bonds. So they're getting out of the stock market to buy bonds, but they're also getting out of the British stock market, the European stock market, the Chinese stock market. Like they're getting out of everybody's stock market. Okay? Which means the Americans are bringing their money home. So if they were they're investing in the British stock market, the FTSE, what they're doing is selling those positions and then trading their pounds, because remember they bought in pound, they're trading it for dollar, which means they're shorting the pound to buy the dollar to get their dollar back to buy U.S. bonds. So in that scenario, the demand for dollars goes up. Okay? The value of the dollar goes up as the bond market falls. The value of the Japanese yen goes up as demand for JGBs. JGBs. Japanese government bonds. These are U.S. Treasury bonds. Okay? So Rookie says it's a safe haven. I'm not sure if it's a safe haven. I think Japan brings their money home, and it's a big country with a very mature bond market. So is it a safe haven for Malaysians or Indonesians? I don't know, maybe. But think of it like in the United States, it's a reserve currency. Okay, it's a safe haven. But really, it might just have to do with, trillions of US dollars coming back home. It might just be America. You see what I mean? So there you go, JK Markets. So this is your last week of the year essentially. So you can do whatever you want, and you can target here or get out, and both of the things are correct. Do what you want to do. Hey, by the way, I had a meditation moment because I meditate every day, and I had this idea through a meditation. If you're in my live group that meets Thursdays, right? Swing trading Thursdays, what if we did like newbie Tuesdays? Where on Tuesdays we can meet and I'll go over piece by piece by piece, tiny minutia details of all the courses and of all the courses. Like maybe start over and just on this day show you how to trade. I mean, literally start at the beginning. What is price action? What are moving averages? What's a stochastics? What's a MACD? What's an RSI? What's a 1, 2, 3? What's the most common reversal patterns? And just start doing that for maybe till the end of January. Just knock out an extra stuff. Just newbie Tuesdays. Okay. So like Kelvin says, hey, can you explain gapping? So look, I know there's 20 videos I've done on how to trade the gap. I can cover it again, but it'd be nice maybe if it was in there too, right? Yeah, macro fundamental basics, like a little bit of everything. A little bit of everything. I mean, one of the things I was thinking of is over the course of weeks, like maybe breaking down GDP. What is GDP? Why does it matter? But then what are the subcomponents of GDP and all that kind of stuff, and break them down so we can talk about how same store sales and retail sales, but in particular same store sales and increased demand and all that kind of stuff, like how does that go into GDP? Oz, the monthly subscription is just $99. Yeah, Joseph said it's a good way to start the year off. Yeah, it might just be something fun to do. Of course, you have to buy the courses, yes. Yeah, so Roger, we can maybe lean a little bit more on that. So maybe my GDP idea would be helpful, right? So here's Kiwi making its move, and it's out of position, so I'm going to move my stop again, and I'm going to lock in 400 pips on this one. So now I just locked in, 1,200 pips today? Yeah, so seems like this is going to happen. Seems like you guys are into it. Oh, I can't type. Oh, my wrist. Oh. Oh, golly, that hurts. Ow. So anyways, visit fxbootcamp.com and join, and we'll come up with something as a community. So I like Newbie Tuesdays, because it reminds me of Ruby Tuesdays, but you have to sell the chainsaw. It's a nice one though, big old 20-inch steel. Oh, but yeah, oh my God, it's heavy. But I felled a tree. I cut out 2 6-foot sections. And then I cut two, right? And then I cut one, no, I cut out 1 6-foot section of the tree. I cut it in half lengthwise with the chainsaw. And then I took, then I made 4 stools and cut notches into them and then placed the flat, smooth tops onto the stumps and then put them in there. So now around the fire pit, I have homemade benches out of the trees from my own yard. Nice white oak. So now I have white oak benches I made with my chainsaw. Junkies, I can't use it anywhere. Should have bought yours. What a beautiful. So I owned probably 2 or 3 other chainsaws over my life, but they're like Home Depot kind of stuff. Never quite satisfied. It always kind of let me down. And then I got fed up, so I go to like a proper store and with a whole steel department, and I'm like, I want horsepower, I want bar size, right? I want maximum chain. And they're like, well, how about this one? And they bring it out. Oh, like there's a full-time show model. She stands there. You should buy this chainsaw. Right? Angels came out of the ceiling and shined, light on this thing. So I bought it, and wham! Oh my God. It's amazing what money buys you. I love it. Master Trader, on your video, June 2nd, 2017, non-farm payrolls, 134. You had a scalping course from New York, London, Shanghai, iNews, Gap scalping. Is it? I don't know if there's a course. That just sounds like FX Bootcamp from 2017. I'm not sure what was in there. Gold and oil. Gap scalping Mondays. Those are just seems like topics of me teaching people how to trade. I mean, it wasn't recorded. Yeah, it would be over at FX Street. So I'm not sure where you got that if you didn't have that already. So you'd go to YouTube. I can't reach the T. You'll have to type that in yourself. You'll have to go to youtube.com/FX Street. And check out that one. Sorry, I can't even type. I couldn't even reach the T on my keyboard. I can't even have my arm level. That's a little bad, right? Little bad. Okay, cool. So, all right. So this is out of position, which tells me we're likely to hit 71.5 early in the week, and I'll probably bail out. So maybe it'll be around the Aussie news, and this will go up there just because they're cousins. And so 71.50 would be an easy target. The monthly target, let's take a look. Again, it's out of position. So the best you could really hope for would be 72.5, 73. So whatever. But I think you can see I'm in getting out mode, not necessarily getting in mode. But you can day trade the heck out of this. There's still another good trading week. Roderick says, maybe you need to have that looked at. I'm Canadian. I'm fine, man. Even if blood is gushing out of wounds, I'm okay, man. It's all good. Rub some dirt on it, limp it off. You'll be fine. Remember, the healthcare system in Canada is free, but have you received anything for free that was good? So Canada, it's free, but like nobody ever goes. And just rub some dirt on it, walk it off, you'll be fine, quit your pitching. Yeah. I'll probably wrap it in duct tape. Yeah, clenching the mouse has a lot. It feels a lot like carpal tunnel. So when I wrote my book, I got carpal tunnel syndrome, and it hurt pretty bad for many years. All right, so anyways, there's the buck. We can go back to this now, see what else is going on. Yeah, everything, yeah. Did we do Euro? We must have done Euro. Yeah, oh yeah, we did Euro. Did we do Aussie? Let's go back. Did we do Aussie? Oh, look at CAD take off. Pretty baby. Pretty girl. Look at you all dressed up. Yeah, that's nice. All right, let me add. Let's go to this other one. Let's throw. There should be some odd going on. Here we go. All right, so we're down here. This is the one I did last week. Look, my stop is still negative 30. Cool, right on. And now I can lock in. All right, I'll lock in 100 pips profit. Oh, say, can you see? Yeah, isn't that great? So that's 1,300 pips locked in. Now let's do, since that's already done and I'm a bull, I don't need to tell myself anymore like, how bullish can it be? That's not helpful. What I want to see is where the threat is. Okay, the threat was supposed to be here. So I'm through the weekly threat. Now where's my monthly threat? Oh, I guess I need to do it this way. My monthly threat now is... Wait. Huh. Okay, so yeah, so I'm fine there. I want to put this back to weekly then. No, actually, I'm going to leave it, but I'm going to put a target now instead of a threat because we're above the threat. That's too high, isn't it? So let me go back to the indicator. Monthly, I need to put this for my conservative target. And yeah, we're kind of there now. So yeah, it needs to bust through this. If we're going to go to 76.5, we got to get through here. But boy, I'm close on bailing on this one too. So let me switch this out so you can see a typical setup. So I'm going to go to pivot points monthly. Okay. And if I asked a swing trader what this says, a swing trader would very easily tell you, you're going to hit this target early in the month, and then there's going to be a counter trend. All that information is here. And you knew this 2 weeks ago. So I have to prepare really for my out. And the first out is there. The next best out, and that's a bit of a stretch now, is here. Okay. So we'll see. Now, do you guys remember back in October and even earlier talking about a time-based exit? Like you can't throw this out simply because you're looking for a time-based exit. But do you guys remember the date I gave as an example? The day I for sure want to be out? Does anyone remember the example? December what? 19th. Okay, so what is the date on Friday? The 18th. So this year, I definitely want to be out by the 18th. Okay? What if it goes higher? Doesn't matter. I'm not in it anymore, so who cares? Not 15th, but the week of the 15th. Okay? And I like what you said. The 15th is because of the Fed meeting, and that is correct. Okay, but there's like 3 other central banking reports and all that kind of stuff. But yeah, it's around that. Alton is right. It's around the 15th. Okay. Some years that'll be earlier in the week, later in the week, and all that kind of stuff. A seasonality, Kerwin. Okay. So anyways, some of these trades have been in, 7 weeks now? And we're in that week. Okay? And the interesting thing is, even when we're trading this next year, our trades are going to come in 12 to 20, maybe 16 weeks earlier than they did this year, but we're going to still have the time-based exit. Clarification, on the other videos, you stated to close trades on January. So yes, lots of people do that, Master Trader. Okay? But you have to have a tax strategy. So I'm assuming you've sat down with your family accountant, your family tax attorney, and you have a tax strategy. Okay? So in this year, I'm deploying a lot of cash, as I've explained in other videos, just sort of briefly. I'm executing on the cheapest money ever. Okay? And I started this process back in January. Well, March and April. So when the stock market dropped and the Fed lowered interest rates to basically zero, is the lowest they've ever been ever. And then he said they're not going to go negative. I started calling bankers and started executing on that cash. So in a year where you're trying to leverage, not on your Forex, but you're leveraging your life, you're picking up cheap money, one of the things you have to show is that you have a lot of cash. Remember, if you're broke, no one wants to give you money. If you're rich, everyone wants to give you money. So on a year like this, I do want to execute before the end of the year. Yes, I'll pay taxes sooner. I mean, you're going to pay the same taxes. The issue is deferring. But when you're deploying and leveraging, you're going to have to show, boom, right? You got to show that you make money. You got to show that you're, all that. So anyway, so this year I would definitely want to get out this year because I'm leveraging other assets in other places. Okay. Remember, Forex is just going to fund the other things in your life. Okay, so for example, if you were going to buy an apartment building and you need to borrow $5 million, they're going to say you need $1 million in cash. Do you have $1 million in cash? Then you try to say, well, but I could, but I'm deferring my taxes, so blah, 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 blah. They're just not interested, right? So, so they want to see someone that's got cash and cash flow, not just asset wealth, right? So that's how you leverage up. So now you own a $5 million asset and you only put $1 million down. But if you buy real estate that way, remember, attached to the real estate and the value of the real estate is derived from the cash flow of the asset. So you're buying a business that makes money. You're buying a profitable business. That's why an apartment building is great. If you're buying a jet, it's a loss. It's a cash flow out, not a cash flow in. If you're buying a car, it's a cash flow out, not a cash flow in. So that would be dumb, right? So anyway, so if you're going to take $1 million out of your trading account, right? So you can buy a $5 million asset that in 10 years is going to double in, asset appreciation, and you're going to benefit from all the renters amortizing, right? And then on top of that, you're going to collect whatever, instead of your $1 million, you're going to collect $100,000 of your profit. So that goes in your bank, so into your pocket. So you get your 10% back every year. But then your renters are amortizing down your loan, and the value of the asset's going up over time. So it's a nice thing, right? Like, it's a very, very nice thing. So, so in some years, if that's what's going on, you're going to have a tax strategy that says, okay, I want to be cash heavy this year, so then I can get rid of the cash to buy a cash flow somewhere else, and then you're going to be high in assets, right? And you'll have some income, but you'll be low in cash. So in the future years, you're going to want low cash, right? So you might push off the other things. You might depreciate, and you might do some other accounting engineering, if you will, financial engineering. But you'll have lots of stuff and no cash. This is why, the Democrats were saying like Trump is broke because he's got over $5 billion in loans. Could you imagine having $5 billion in mortgages? What does that tell you? He owns apartment buildings. He owns skyscrapers. So if he's got $5 billion, he's probably making, $300 million a year just by owning the pieces of paper that say he owns those properties. So someone will come in and tell you he's broke. He's broke because he's got $5 billion in loans. Yeah, but he has to live on $300 million in cash every year doing nothing. Does that sound broke? No, not to me. He's broke, but he flies around in a jet. Who pays for the jet? His renters. Who pays for his giant house in Florida? His renters. Who pays for his Rolls Royces? His renters. Yeah, but he's an a-hole because he's got $5 billion in mortgages. Mortgages are great. Paying for your plane, paying for your Rolls Royce, paying for your giant house is stupid. Okay? Having other people pay for those things, like renters, awesome. So I wouldn't call someone with $5 billion in mortgages broke. Okay, let's go back to do the commodities. JK Markets, you're you're asking good questions. I don't have enough time to answer these in detail, especially at a free webinar with hundreds and hundreds of people. You should just join FX Bootcamp and come to our live groups. Okay? Kick down, come clean. Don't be a holdout machine. Okay, we're following this up. The plan was to get this to 47.35. You did it. Are you out? Okay. Thanks, boss. Okay. So you got to be careful. This, right? We're opening high. Right? So you got to be careful. Okay, there's a high open. Okay, I'd be careful. Going back a couple other days, to contrast the high open, look at the low open. But stick with your plan. So tomorrow's entry is 47. We're basically at 47. So I don't know if you want to do tomorrow's trade today. Mar-a-Lago is funded by the Secret Service. It is now. So many of you guys, in particular, people that hate Trump, right? And by the way, I'm not political, so you can hate Trump. I'm not saying I love Trump. It's not you and me versus our opinion on Trump. Okay, it's almost boring. I would never want to talk about that. I have a friend at Harvard that's all he wants to talk about is how much he hates Trump. And at first I'll joke with him for about 3 minutes and then I'm not interested in listening anymore, right? But most people that hate his guts have never actually read his book. In his book, The Art of the Deal, so I think it's an interesting book because it's just, so what he did is he asked his support staff, and in particular his secretary, who documented every meeting of every day. They went back and it was mostly ghostwritten, by people going through his agenda and day by day talking about what he talked about. So anyway, so one of the things that started happening is somehow someone knew him from visits to Florida and knew he was a real estate developer up in New York and they had a ton of money. And this is, early in the early 80s. And this house in Florida it was in rough shape, needed someone to buy it that had cash and fix it up. Okay? And for some reason, they didn't, the people that were representing the home, trying to sell the home, didn't call any of the neighbors. Why? I don't know. Stupid is as stupid does. So anyways, they're calling a bunch of people, and one of the people they're calling is Trump out in New York. So they call Trump. They're like, this is a $50 million house. You can have it right now. Right? You can have it right now. How much will you pay us? And he said, $40 million. And they're like, hell no. So a year goes by, and they call him back. Hey, this house, Mar-a-Lago, is still available. We'll take your $40 million. He's like, no, I'll give you 30. They're like, 30? You said 40. You're like, that was last year. Now I've changed my mind. I'll pay you $30 million for this. They're like, how dare you? So they hang up the phone on him. They call him back a year later. Okay, we'll take 30. He's like, I'll only pay you 20. They're like, you said 30. Like that was last year. If you want 20, take it right now. Just say yes, I'll take it. They're like, go to hell. So they hang up the phone. And another year goes by. They call him. They're like, we'll take it 20. And they do. Every year they do this. And then he ends up buying it for like nothing. So cheap, in fact, when they find out that Trump from New York City bought it for like, I don't know, $8 million or whatever it was, they were livid because all the neighbors, they paid $50 million for their house. And then this dude shows up for 8. They're like, why didn't you just call us? We would have paid you. Like, now you're lowering our values and all this kind of stuff. And they were really mad about Trump. But it was in rough shape, so they start fixing it. The other story is he put in a swimming pool, and he told the developer that was redeveloping this property, he's like, I everything I want done, it has to be perfect. Whatever you do, it has to be perfect. Right? And so anyway, someone put the pool in crooked. And he gets the pool people over and the lead developer, right? The lead developer. And he's like, it's crooked. It's off center. It's off center and crooked. And they're like, dude, it's only like 2 feet. We screwed up, but it's only 2 feet. It's a swimming pool. He made them rip it out. Rip it out. I told you. Double, triple check. He's like, when I get off my helicopter and I walk into my property, that's all I see. I don't care how hard you've been working and how long it cost you and how much money you spent making this. I get off my plane, I walk into my backyard, and it's all left up. It's not my problem. You have to rip it out and do it again. He made him do it. And I'm funny, too, because I've done that where I've had crews planting trees in my backyard, and they planted it in the wrong spot. And they're like, but it's only 2 feet. I'm like, yeah, I know, it's only 2 feet. I wish you had done it right the first time. Dig up the stupid tree, move it over 2 feet, and plant it right. And they called me the a-hole. I'm like, dude, you screwed it up. It's not my problem. Should have been doing your job. Anyway, so there you go, right? So I thought that was cool. Like, I think that story about just every year knowing that you're not getting the market price. Anyway, so, I thought that was cool. Right? So he owns Mar-a-Lago, and like, oh, it's just because he's a rich billionaire sitting in New York City and everything is easy. If you read a story, nothing was easy. And when you own a giant, beautiful house like that, it took him 5 years to get it, but he only got it under the right circumstances. He didn't buy it just because he was a rich a-hole. He was a rich a-hole that bought it properly, in my opinion. Right? Some guy whose granddaddy made the money would have just paid the $50 million. So, anyways. Okay, there you go. That's how to trade a gap. Boom. XRP, way down in the 40s again. No, ETH, not really. Erythium. Yeah, master traders like gaps now in Forex are not. No, you're right. And that's why I don't really cover it anymore. Gaps in Forex are just really not that interesting. I've been getting a lot of questions about it maybe in the last year or so. So there must be some dude trading stuff he read or teaching stuff he read in books that are 10 or 15 years old, because that used to be a thing. And it's almost like scalping. Like scalping to me is different now. It's more like short-term trading. But short-term trading and scalping used to be quite different. I guess we'll do yens. So, right, like, when was the last time on a dollar pair or yen pair you pulled the trigger and made 50 pips in less than 5 minutes? There are people here that probably have never done it, because it doesn't do that anymore. Even non-farm payrolls. In non-farm payrolls, you used to be able to make like 150 to 200 pips in like 5 to 6 or 7 minutes. Now it moves 40 pips and stop. So like, would you call that a scalp? It's nothing like what scalping used to be. Now, yeah, you can make 30 pips, but then I'm again like 30 pips is nothing. So like, what am I going to do? Leverage up to make a quick buck off of non-farm payrolls that only moves 40 pips? Like, it just doesn't make sense, right? It's a short-term trade, excuse me, but it's not really that important. Now, there was a time when if you were lower leverage, but you can make 200 pips on the news release, you're like, okay, that's a scalp. You're like, cool, right? You risked about 20, you made 200, it was good, and then you're done. And so again, sort of like gap trading, you're like, what is this, from your grandpa? What do you mean gap trading? Oh, well, a gap 12 pips. Okay, well, that's not really a gap. Okay, a 200 pip gap is a gap. And I know how to trade those because I've been through them a million times. So like, we could look at this. Okay. There's a gap there. Cool. Okay. And it's a pretty nice one. I think what's happening now has nothing to do with the gap. Okay. Typically what will happen is the gap will close in the first 4 hours, let's say, and then you would do this. So now you're like, well, now it's coming down because of the gap. Maybe. But nonetheless, you should be just trading it properly, and right, it's not really the gap. But you would have a strategy like this now to fill this gap. Okay? And the gap is simply fill the gap, continue mission. But that used to happen in the first hour, okay? Not the first 24 hours. And some people do these mistakes like, you know, it's Thursday and they're like, well, I'm filling the gap. What gap? From Monday? You're doing the Sunday open gap on a Thursday. You're like, yeah, well, I read it somewhere. I'm like, dude, not cool. No. So anyways, this is the only thing I could offer you gap-wise here. Okay? But it typically doesn't happen anymore. Now, some Brexit news and all that kind of stuff could do it. But generally, it doesn't happen anymore. And every once in a while, there's a glitch in the matrix, and you'll get like a misprint or you know, stalled out chart that then prints that. You know, like just platform error type stuff. But those are pretty rare too. But that's that. Okay. Speaking about reading, I think I'm adjusting my idea for the book club. Just a tiny, slight adjustment. We're still going to do everything, and I'm having things programmed and designed in a way for a lot of collaboration and team reading. But I was thinking that at the end of this, I'm only going to do it to a point. Not like an indefinite forever book club. We are going to read the top 100 investing books of all time. That's what we're going to do. That is the goal. As a team, we are going to read the top 100 investing books of all time, whether it's investing in stocks or bonds or real estate, currencies, trader psychology, Forex, commodities, whatever. But as a team, we are going to read. Now, maybe it'll take us 2 or 3 years. If we were aggressive, we could do it in 1 year. But the general idea is we will read the top 100 investing books of all time. I think that's really cool to know that you have that under your belt and to give you a well-rounded, holistic view of the world. Because remember, I have my philosophy with investing is influenced through macroeconomics, and that would affect the business cycle in the United States, which would then affect the real estate cycle, for example. So I see a butterfly flap his wings in China, and I'll see it affect the real estate market in America, right? But the idea that you have this well-rounded, holistic point of view that fits into my Newtonian physics philosophy of investing, I think would be really cool. So imagine you read 5 books on real estate, 5 books on bonds, 5 books on stock picking. So you've read basically all the Warren Buffett books. And so if anyone ever mentions anything about Warren Buffett, you know everything there is to know about Warren Buffett, kind of thing. Okay? Jim Simmons, the man who, right? Oh, that's cool. I want to read like a venture capitalist, and there's a lot of stuff. So imagine, though, that we burn through that as a community. And the only way to do it is for me to lead you through Harvard's case study methodology. Because if I said read 100 books on investing, you're not going to do it. And then even if you could do it or did do it, what you'll find is you'll read it, but you won't learn anything. You'll remember some pieces, but you'll read a bunch of books and you won't remember. So it's a lot like regular universities basically say, read this book, a professor gets up there, teaches you what you already read in the book, and at the end of it, you do a test and an exam, you pass, but 2 years later, they ask you to something and you don't really remember anything, right? So the Harvard created or invented this teaching methodology, which is more like learning from a mentor. Imagine now that, we're talking about, you're learning from Socrates, okay? Socrates would have you read a book, and then you and Socrates would walk through a field and talk about it. And then you'd sit on the stairs, and he would ask you questions, and you'd have a conversation about what you learned, and he would educate you. This is how the classics were taught. This is what education was like 4,000 years ago, right? And now, for some reason, there's some idiot at the front of the class lecturing you. And you keep your mouth shut, take notes, and there's going to be a big exam. And that's that. So that's not the right way. So, again, my goal is for us as a community will be to use Harvard's case study methodology of having a conversation about what we've learned all the way through as an educational guide. And it's the difference between being smart, being educated, being intellectual. See, a smart investor is someone that just has some street smarts, right? Right? Like they're just smart, generally born inherently smart people, and they hustle and they got some good experience, but they might just be generally uneducated, but they're still smart. They just never got an education. And of course, a smart person with some education is a pretty dangerous weapon, right? The next one is you're educated. You read a lot of books, but it doesn't mean you know your stuff. It just means you read a lot of books and you passed some exams. But there's tons of situations I can think of where I read the books, I took the exams, I passed the test, I got the certification, right? And you're like, but all you did was do enough to knock out the exams and get the certificate, and you're done. You're like, okay, great. Now you're the expert, and you're like, yeah, no, right? So then the next one, the difference between educated and being intellectual, it has to do with the conversation. The collaborative interaction in that process, right? Truly mastering through understanding, not just through an examination, right? And so like, that's what I want to achieve, where we can read, not only just read the top 100 investing books of all time, but there's this level of dialogue attached to it. I'm not trying to make you a smart investor or an educated investor, but an intellectual investor. And so I want to sprinkle that in there. And for that to happen, we have to have this has to be hugely collaborative, right? Hugely collaborative. So that's why I've decided to use the case study methodology. So if you're not familiar with what that's like, if you, let's say, go to Harvard Law School, the professor comes into the auditorium and the room goes quiet. Or maybe Harvard Business School, they do it this way too. Harvard Business School, you take your seat and everything. Professor comes in, everyone goes hush. And then there's a formality to this, like everything is recorded. Not just video, but like everything is documented. So he'll say, Jamie Smith, stand up. Okay, Jamie Smith stands up. Give us an introduction to the case. And you should give probably a 10-minute overview of everything about this case. And it's on the spot and it's recorded. This is your response. It might be your only response for the whole class. Like, this is graded, recorded, super important, right? So you have better read the case. I mean, if you haven't read the case, you shouldn't be at Harvard. Like, screw you, get the hell out, right? So now you have to, right? And then he may ask 3 or 4 or 5 other questions. Well, what kind of person was the case, study about? Like, where did he come from? Was he rich? Was he poor? Was he aggressive or conservative? Like, if you met him, what would this person be like? And you're like, oh my God. So you really kind of have to know your stuff. And then from there, other questions are opened up to the field, and then and students might have questions for you. Students might have to answer other questions to the professor, and it's a discussion, not a lecture. Do you understand that? Right? Not a professor saying, I'm the expert, you listen to me, keep your mouth shut and take notes. So anyway, so that's how we're going to get through 100 books in a couple years. Okay? We might even be able to do it in a year if we want to take it seriously. But the thing is, you can't read a 700-page book in 2 days. But the class can. Okay? Oh, my wrist is just crazy shot. So anyways, so that's what's on my mind. And I'm pretty excited about it. I think it's going to be pretty awesome. And then we're done. I think we're just going to be done. It's like, to me, a project, not open-ended. You're either involved in that whole process, and you can hold your own under almost any investing subject there is. And then someone will say, well, do you know who so-and-so is? Yeah, I read his book. Or, did you ever read this book? Oh, yeah, I read his book. I know everything about him. I read all 3 books, in fact. And you're like, holy crap. Okay? And not only did you read the book, you remember fine details of the book, because you're not just educated or smart, you're intellectually involved in the subject matter. Okay. All right, so somebody asked about that moving too fast, and I'm like, well, I just see it as a gap trade. Stochastics says, no way, Jose, all that kind of stuff. I got knocked out. I don't even remember the price anymore, nor is it really relevant. But somewhere in this decline, probably in here. I probably had it measured like this. So somewhere, probably a drop under this price here probably knocked me out is what I'm guessing. Okay, so I'm probably out there. It might have been in here though, so who knows. But so long and gone and done and not interested. And there you go for those who are interested in still trading the pound yen. I don't like buying it. I don't like buying sort of the second lower high. Like, that's just not interesting to me, okay? Because what I see here, and the reason I got out, to be clear, okay, is if we got lower, then it's projecting a lower low. So if I got out in this area, it's because clearly it's going to make a lower low. So now we've made this high, and we're going to fill the gap. But it could certainly do this. And that's why like a gap that doesn't close in the first few hours is sort of a dead gap. Okay? Okay, so there's right? That could be in play. And because I'm not in it because of these could, probably, might ideas, I don't trade in those situations. That might be what happens there, but that's why I'm not in the trade anymore. So think of it that way. Okay, this one, we're just riding the 21. Let her ride. Okay, I only have 300 pips locked in on this one. Boo. Well, so new trader says, so nothing can be done in this? Well, I'm trying to be clear that I'm out, so I'm not going to have the same point of view as someone that wants to get in. I'm out because I see it as mediocre. If it was good, I'd be trading it. So does it mean nothing can be done? No, it means my lens that I'm looking, right? I'm looking at this through a perception, right? And I perceive it as mediocre. That's why I exited. So I'm not going to be able to analyze it in such a way that might be helpful to you because there's a filter on it. Doesn't mean you can't. It's just I'm done. And looking at it like someone's going to trade the gap in a reverse fib situation. And I'm like, I don't think I'd do that. And for me to trade the gap, it would have filled in the first couple of hours. It didn't fill, so I'm already ignoring the gap. I don't want to buy it up high off of a lower high. It's just like, I don't see me making easy money there. I only want to make easy money. I don't have to work hard, right? If I wanted to work hard, I'd own a restaurant or a farm or something. But what happens when you work hard? You hurt your wrist, and now you can't. You walk through life, and you're like, oh, my wrist. Why did you hurt your wrist playing volleyball? No, I was working hard. Oh, that sucks. An idiot wants to work hard. You want to work smart. Ugh. So I was an idiot with a giant chainsaw. But I made something cool for my wife and kids. So anyways, so that's that. Euro, again, we're just following the rules of engagement I created a week ago. Look what I drew and what we have. Isn't that cool? You guys remember talking about this? It's not that bad, right? Like, it's pretty close, isn't it? We were riding the median, right? Yeah. Working hard and smart is good, for sure. So remember the requirements to be a success in Forex. You have to have at least half a brain. If you're an idiot, I'm sorry, there's nothing I can do for you. Okay? Do you have to be a genius? No. Do you have to have a PhD? No. Do you have to be an engineer? No. Do you have to be knee deep in math? No. Do you need to know how to write good? No. But you do have to have at least half a brain, right? I'd like you to be smart. Do you have to be educated? No. But you need to be smart enough where you can be educated. And then you have to have a ridiculous, sickening work ethic. Okay? Okay? But at the end of the day, it's good, clean, easy work where you're like, oh my God, I have to print out the RBA statement and read it and have a highlighter. Yeah, which is a lot different than using a chainsaw all day. Okay? Okay. Pound doesn't love Roger. Yeah, so again, I stay away from the pound because I don't get it. Like, Brexit isn't fundamental. It's all headline driven. So I don't know how I could plan properly. I mean, you can do it, but I'm just staying away, right? That's all. So let's see. We did the calendar. We did yen pairs and dollar pairs. I'll tell you what. I'm going to take a 1 minute break, and then I'll come back and answer your questions, and we'll call it a day. Make sure you click like, okay? All right, miss me? All right. How can I help? Talk to me, Goose. Did you click the like button? 50 people have not clicked the like button. What's wrong with you? What do I think about trading Forex and stock at the same time? Awesome. Awesome. Love it. Okay, love it. Now, it depends if you're using a stock indices attached to your broker, right, your Forex broker, or if you're trading multiple brokers and you're actually trading real stock, actual stocks, or if you're trading S&P 500 futures contract versus some other derivative indice, You got to be careful because when I first started doing that 15 years ago, I guess, it was a real problem. It took almost a year to do my taxes. My tax filing was something like 700 pages. I'm not joking. It cost me probably $10,000 to get my taxes done, right, with all that kind of thing. And even with that, I had to pay quarterly along the way because I'm a small business, and we overpaid my federal taxes. Right, that year I got a federal tax return of more than $100,000. my tax return. I don't know what most people get. I'm an entrepreneur, so I never got that stuff before. Like, what do you mean, right? I never got a tax return. That's what people with a job would get. So anyway, so I got $100,000. It was more than $100,000 federal tax return. And then I got a $50,000 IOU from the state of California. So some of my state taxes, so half my state taxes that year. So it was the year I moved to Georgia. So half my taxes were in California, and the other half were in Georgia. Just my California taxes produced a $50,000 state tax return. Just my state taxes. So what am I saying? First of all, I made a lot of money. Second of all, the complexity of what I was doing was outrageously expensive, very hard to track, and I overpaid my taxes by hundreds of thousands of dollars. So imagine getting a $50,000 tax return from 6 months worth of taxes at the state level. Like, it's inconceivable. You're like, holy crap. Okay? Yeah. And the funny thing about that story, too, is that I got an IOU from California. They didn't even have the $50,000. It's true. I wish I have it somewhere, and we'd have to find it. I talked about it with my wife not long ago. I'm like, oh, I should have kept that. An IOU from the state of California. But then think of it in real terms. Okay, think about it in real terms. In 6 months, I overpaid my state taxes by $50,000 because my tax situation was so complicated. Now, that is an inefficiency and misuse of capital. Basically, I gave California a loan, right, for free. And that's not a good use of cash. And then at the same time, that was just 6 months of California. Then I spent the other 6 months in Georgia. So we got a Georgia tax return. And then the feds gave me more than six figures of a tax return. So I left hundreds and hundreds of thousands of dollars on the table and then spent tens and tens of thousands of dollars doing it all because my taxes were too complicated. Why were they too complicated? Well, because the Forex market is given a certain tax treatment, and that has to be filed as a Forex tax filing. It's like separate. And then stock, actually buying and selling stock, it has its own tax treatment. It has to be filed in all different forms. The AQ1A form has to be filled out for this and that, and all that. So real stocks, and then stock indices, and then futures, and physical gold versus gold futures versus gold on my Forex account. And all of a sudden, I basically had like 6 tax returns that had to be filed, treated differently. So now the accountants and the lawyers, and they have to do it all. Like, how do we handle all these trades? How do we handle all these trades? So it was like I was really running 7 businesses. One that does futures, one that does stocks, one that does stock indices, one that does Forex, one that does commodities. All had to be done differently. And I realized how bad that was. Oh yeah, I didn't pay a lot of taxes relative to the amount of money I was making, right? So, and the good thing about that is I got a couple $100,000 back in tax, right? But I wasted it because it took me a year and a half. So basically, I loaned California, Georgia, and the feds a couple of $100,000 of tax-free money, right? Like, that's stupid. So that's what was problem. That was the problem, okay? So and I'm answering the question, what do I think of trading stocks and Forex at the same time? Yeah, it's good, but make sure you think about the way that you're doing it so that it's advantageous to you on the long run. So that was a mistake year for me. It was too complicated. And I realized I was doing almost all of that trading on my Forex account anyways. Okay? And that when you look at certain things like at the time, I believe gold and the Aussie dollar had like a 0.91% correlation. So what I did is I changed my Aussie dollar chart. Instead of saying Aussie dollar, it said gold. And I started trading that. And I essentially get the same trade with more leverage, right? Less cost. Right? So let's say I can get the gold trade with less cost and an easier tax treatment because it was treated as Forex. And Forex had the best tax treatment there was, right? My costs were lower. It was easier. It was taxed better. And I'm like, well, holy crap. I don't need to be doing gold futures. I could just be trading gold, right? And now, then this was before XAU was created. And now you can trade XAU, which is not physical gold. It's not even a gold futures. So it gets traded because it's XAU versus USD. So it's basically a USD trade. So now it's taxed like a Forex trade. And you're like, but that's what I want. So now I try to simplify my taxes. Okay. If you plan on trading, should I get an LLC? If you are losing a lot of money or making a lot of money, I would say yes. Okay? If you're losing a lot of money, there's a lot of advantages to being an LLC. Now, what a lot of people do, and of course it's a mistake, they go out and they buy the cheapest LLC they can find and they think they're good. No, you have to do everything right. And imagine everyone around you is an idiot. So you're going to have to take control of this. You need to have the right bylaws that show that your business is truly created for the foreign exchange business. If you just go to I don't even know if it exists, but LLC.com. I don't even know if that's a real company. But let's say you can just go to some website and buy an LLC for $2,000. Well, then they're not going to write bylaws specifically about Forex trading. So if you ever get audited, one of the things they'll do is they'll say, okay, bring your articles of incorporation. And they're like, dude, this is for selling ladies' lingerie. This has nothing to do with Forex. There's no bylaws. You never even had a board meeting that allowed you to open a Forex account. None of this. You're not running this as a Forex business. No. And all of a sudden, it's all thrown out. Okay? So you need someone to write bylaws that say this company is in the foreign exchange arbitrage business, which will use cash as inventory, and will try to trade this in the interbanking system to purposely make profit. Because most market participants in Forex don't use it to make profit. They're either hedging or they're just moving money around. So you have to have a business that actually takes advantage of it, through speculation and arbitrage. Okay? Then you need to be able to have what's called trader tax status, which means you're not a Forex investor. Because then what you'll show is truly your cash in the account is inventory. You want your cash to be treated as inventory, not as profit. So you have to trade properly, have a proper trade history. Okay? But yes, as a foreign exchange company, as a foreign exchange arbitrage speculation company, you have the ability to do things like write things off, right? Write off your expenses, right? So if it costs you, let's say it costs you $3,000 to get your taxes done, it's a business expense, not a problem. Okay. If you're going to buy a trading rig and 3 or 4 or 5 or 6 or 20, right, like me, screens, business expense. Yeah, it's great. Instead of paying taxes, you get a trading rig. Okay, pretty good. But never do anything cheap. Okay. And you should probably have a business plan too, just so that if or when you get audited, you're like, well, here's my articles of incorporation that specifically show that I created this business for foreign exchange arbitrage and speculation. And second of all, here's the business plan that goes with this company. And you have to show it's a legitimate company. Well, you're lucky I'm here then. Nestro City, you're lucky I'm here because you need to convince the government that that's what it is. If you can't do it, then they're going to just find the way for you to pay the most taxes. Okay? Remember, you have to do this because you will have to educate the government on what you do. I've had the NFA in my house, and they didn't quite get what I did. It's crazy. It's truly crazy. Do you really need fundamentals in day trading? If you want to be consistently profitable, and if you want to understand why the markets behave the way they do, then absolutely, emphatically, yes, you need to understand fundamentals. If you want to be an amateur forever, go ahead. I know that I'm being brutal, but it's true. Okay? It's like saying you want to be a brain surgeon, but you don't want to know how a knee works. I just want to do brains. But knees? Why do I have to understand the anatomy of the whole body? Why do I have to understand the heart? Why do we have to study like what medicine does? Like, I don't need to know that. Besides, the nurse, she knows a lot, or he knows a lot. Like, I just want to do the brain, that's it. Like, it doesn't make sense to expect to be a successful trader, but you know the why behind the market behaves the way it behaves is created fundamentally, but you're like, I just don't want to study that. It's really childish. And I don't mean to insult you. Well, I can do a little bit, but only to I'm trying to do this in a way that I'm emphasizing how important it is. Okay? Right? I'm trying to emphasize how important it is. You're like, what fundamentals should I focus on day trading? What does day trading have to do? If you don't know what's going to happen 2 weeks from now, your day trading sucks. Now, and I explained it on Monday. Maybe you should go through that video again. But like, what did I do? I did something like we were on a trend. I showed on a trend trade somehow. And it was something like this where well, let's make this a little fatter. Let's say you've been on a move for a while. Okay. You can get in situations where you don't anticipate changes ahead of time. And I'm not going to be able to draw this well, but like you had to stop here, stop here, stop here, a stop here, and then out. And then, so I'm not drawing it well here, but what I'm showing you is fundamentals help you predict the future. So you're like, well, I only day trade. Well, dude, if you have no reasonable ability to predict tomorrow, next week, next month, then what'll happen is you'll have 5 or 6 good trades in a row and because you're day trading inside of a trend, but you have no ability to kind of predict the end of the trend or a reversal of the trend until it's already happened. So what ends up happening is you out of 10 trades, you'll have 4 losses. Okay? But you'll give up 70% of your profit. And you'll still be profitable, but you're just never going to get beyond what I would consider mediocrity. And you'll never really make true money. So inevitably, I think what will happen after you doing, mediocrity for 3, 4, 5 years, you'll get sick of it, but you'll see the consistency. At least if you're very good with technicals, you'll be consistently mediocre, but profitable. But what will happen, I think, psychologically, is over the course of 2 or 3 years, you'll get frustrated with really not growing your trading account much. So you'll start creeping in extra leverage. And then all of a sudden, you just threw away your career. And the whole time is you didn't want to read a book on what GDP means or take a course on the difference between PCE and CPI. You're like, I just don't want to learn that crap. I'm just a day trader. You have to master everything about Forex. You have to be, in my opinion, you have to try to be the world's greatest trader and know absolutely everything over a course of time, or you will get mauled by those who do think and act that way. Okay? Mauled. And you'll be screaming and yelling, help, but I'm just a day trader. Right? Oh my God. Just a day trader. I think, right, you need to be good at everything there is about Forex. And in 20 years, you still are trying to be the very best at everything at Forex. And once you're complacent, you go straight back to mediocrity. I'm telling you, the mediocrity doesn't get you there. So let's put it this way. 95% of retail Forex traders lose all their money. So what's average? Losing. So is your mediocrity going to get you much beyond the losing, which is average? You see what I mean? I don't want to be an average loser. I don't get out of bed to be pretty good. In Forex, average loses. So you constantly, right, think about, King Kong pounding on your chest, right? How does that go? You can be a champion. You can be the best. You can be King Kong pounding on your chest. Like, that's you. You're a champion. You're not a bench player on a mediocre team. You want to be a franchise player. Or at least you practice like you do. Okay? So that's sort of my trader psychology into the answer. I think the attitude is the most dangerous part of I'm just a day trader. Well, I'm going to destroy you. Not me personally, right? Not like that, right? But like, if you go up against me, I'm probably going to win. Now, I won't know it's you and you won't know it's me, but I'm probably going to win. Right? Maybe not one-on-one, like maybe because you're such a great day trader, you get me today, but over long periods of time, it's mine, right? It's mine. I got it. Because I won't give 70% of my profit back. Right? And that's what it's all about. So how do you know not to do those last few trades? I don't know. Learn fundamentals and we'll talk about it. Theta says, hey, can we use standard deviation to add to a trading decision, all that? Well, it's just telling you where we are but based on historic data points, right? So my point on using this 2 weeks ago, was it? Is that we were here, I think. And I'm like, well, statistically speaking, we're pretty close to the average price. So it comes down to what you think the overall trend is. right? If you are a bear, once you sort of get in there, you know it could turn around, okay, and start trending lower, and you would change the slope on this, right? Remember, slope is M. M equals rise over run. So you would start to get a negative rise over run again, okay? The second thing is, as a bear, let's say, up in here, you know you're more than one standard deviation from the mean, which means typically the market starts to roll over and head down, okay? But in this world, this is the average expected price over this period, right? Based on the data set that you're measuring, that's the sort of the normal price. This is what you would expect it to be, okay? So bulls have this attitude this way. They're looking at it from where we are, and they're saying there's two things going on. One, the rise over run is a positive number. Literally, the rise divided by the run is a positive number, so we're sloping or trending upward. And then the second part of it is when you're up here, you're most confident because you're rising above the average price. So it's more bullish, okay? So can you use it to re-enter a trade? Well, in this case, this is the average price. Is that going to give you support? No, it's just telling you what the mean is. It's not average, it's mean, right? And then the second one is, you know, when it's oversold, for example, like this. Is that an opportunity to buy? No, not necessarily either. But it's telling you it's extremely oversold. Okay? Now, you can use that intuition any way you want, where you can say, well, if it turns positive here, then I want to at least day trade it up. Okay? And same thing, if we get here like a 1, 2, 3 pattern and you get it here, could you buy it here if you're already a bull? Yeah. But does it put you in another trade? Not necessarily. Could you use it in your analysis to consider adding to another trade? Yes. Okay? But I think the most powerful forces are price action, okay, and pivot points. Now, these are helpful only because I already have a bias. My bias is created from fundamentals. And my analysis is, right, global macro. So now I could explain this to a potential investor what I do. Okay, so from all of this, I do macroeconomics, global fundamentals, and from that I create a bias, and then I use two different leading indicators to discern and differentiate the best price and the best time for executing my bias, which currently for euro yen would be a bull. Okay? And is the slope of the trend important? Yes. In particular, the change in the slope. So if it suddenly becomes negative slope, so you get negative rise, which is a fall, negative rise over run, I go super cautious as a bull. Okay? Okay? So in this case, how could I add to a trend? Well, I would do things like, okay, that would be good. And then you can see I already have this one planned out. Okay. And then to add to that, so I can change this completely now. I can say swing trading bullish. Okay, let me zoom back in to where we were. Okay. put it on a 4 hour, and I would be buying in here if I were me. Okay? Cool. To change this again, I'll just change it this way. No, you know what? I'll change the template. So now I go here, template, day trading bullish bias. Let me zoom in again. And what I want to see, so we know, I just showed you, this is a bullish buy zone for today, but actually this week. And what I want to see is step ups on the daily. Is it because this is sitting on the daily average price with a positive slope? Yeah. Is it the only reason? No. Would I behave this aggressively if we were at the lower boundaries, like we were below mean prices in an uptrend? No, but I would be looking for reversal patterns. Would I trade this way or plan this way if we had a negative rise over run, meaning the slope was the slope over the last, let's say, month or two was this way? Would I behave this way? Probably not. Okay. So how would I add to it then? Well, I'd say once we're at that mean and I have a weekly plan. So remember, the plan for the week is to do this. So this is your weekly. So now I'd be stepping up. Okay. Now I would be stepping up through the day trades. So I'm assuming now you know regression analysis. I'm assuming you know how to swing trade, and I'm assuming you know how to day trade. And I'm assuming you understand the fundamentals between this. A lot of this has to do with what's going on at the Fed and has nothing to do with euro or yen. Now, if you don't understand the regression analysis, the global macroeconomic forces, you don't understand the swing trading or day trading of what I just lined up, then you don't speak my language. Okay? You're asking me for advice. I'm giving you very clear instructions. And if you don't understand my language, you need to get educated so that we can have an intellectual conversation about how to trade properly. Okay? You see that nice tie-in to the book club? Cool, right? Yeah, cool, awesome. Cool. My God, I don't even think I'm going to be able to play Far Cry with a wrist like this. I'll do my best. Love those bibbits, whoop whoop. I like that, Master Trader. Master. Cool. I hope you guys are having fun too, by the way. I think it's been a pretty good year. It's actually been an all right year. We've had, despite COVID and our flash crash, it's amazing how logical the market behaved. Right? Like, do you remember the time when I said, today is the day you need to pick, 3 stocks you've always wanted to buy but have been too expensive? Do you remember that? I think like that within 3 or 4 days, that was the exact bottom of the stock market. I'm like, this is it. Now's your time to do it. I said, excuse me. I said, you can't save your way to prosperity. Remember? Well, you wouldn't translate them. You make a decision. It's your ability to make a decision, Chemical. It's not going to put you on a chart. The fundamentals will tell you why the chart is going to do what it's going to do. If you don't understand the flow of money globally, you're going to always be a mediocre trader. Because your job is to be able to predict the global financial markets. You're like, I can only do it for a day. And then, of course, half the time I'm wrong. Well, dude, nobody's interested. That's not a valuable company that people would want to be a part of. Now, you might be able to make money, and you'll have yourself a little, I don't know, a little business. But you're depriving yourself of a legitimate business, not just sort of, I mean, I don't know. In my book, I talk about the difference between being a cheeky little monkey and an 800-pound gorilla. At some point, I want you to become the 800-pound gorilla. In the beginning, you'll be a cheeky little monkey, and the story I give is something about, he's the 800-pound gorilla, and he's laying next to the tree, and he's got all the bananas, and he's got so many bananas, he's just spilling them all over the place, and he's slow, he's sleepy, just sits under the tree, sleeping and eating bananas. But you're a cheeky little monkey, and you just go in there and you grab the low-hanging fruit, you steal stuff that he's dropped, and you're just in and out, in and out. But at some point, I want you to be the 800-pound gorilla. And what you'll be fighting is sloth and complacency. Okay? You can be the champion. You can be the best. You can be King Kong pounding on his chest. Or you stay amateur for years and years and years and years. It's your call. I want you to master everything there is to know about your domain. I want you to be an industry expert that someone can turn to for advice. Okay? Okay? Living in the Hall of Fame. Yeah. All right. So anyways, yeah, that's it. I'm spent. So I prefer saying goodbye this way. All right. Biatch, please. You're like, oh, that scared me. Yeah, I don't know why that was muted. But anyways, thank you for being here. Thank you for your time. Thank you for being part of the Forex.Today YouTube community. Please like, please subscribe. And in approximately 2 minutes, if you refresh this page, what you'll find is you'll be able to leave a comment under the recording. What I ask you to do and what I suggest you do is in the comment section below the video recording, you document what you learned. So you could say today, whatever, hyphen 800-pound gorilla. Now, in your back office at YouTube, you can search your comments. So imagine 3 years from now, you'll be able to type in 800-pound gorilla while searching through your comments. Pull up this video and you can watch this one again. But imagine if you put in linear regression, since I took you through that. So now you can have an archive, a repository of knowledge, and you might type in linear regression and find out there's 6 videos you saw over the last 3 years that really cover that in depth. And now that's yours. That's your alpha, your ability to go back and grab knowledge whenever you need. So I highly suggest you do that. Also, please visit tradersway.com and give them an opportunity to earn your loyalty and respect, just to show, just as sort of a requirement of being part of this community. Okay, it's not a big ask. Visit, create a demo account, download MT4, MT5, play some demo trades, and it's just a way to show that you're a part of this. Okay? And no, it's not a way for me to earn commissions or something like that. That ain't me. That's not what the Wayne do. But it does show that people are coming over from YouTube to Traders Way, and it just shows that we are a valuable community. Okay? So anyways, peace on earth. May the pips be with you. May your profits be above average. And I'd prefer if you earned a commission. Yeah, that's not what I do, though. Okay? It's just, no. But I do want to show that our community is valuable. Okay? So that's one way to track that matrices. So, peace on earth. May the pips be with you. May our profits be above average. See you, team. I'll see you tomorrow, and the next day, and the next day, and the next day. And then we'll close this thing out.